Welcome back to channel. Today, we are breaking down essential practice MCQs in financial management. Let's start. Question 1. In the modern approach to financial management, the scope of the finance function is concerned with. The correct answer is C. Why? Because the traditional approach only cared about raising the money, procurement. But the modern approach is smart. It says it's not just about how you get the cash, but how effectively you allocate and utilize it to create value. Question 2. Which of the following is considered a primary, hybrid, source of finance? The answer here is C. Preference shares. Think of preference shares as a financial shapeshifter. They are called hybrid because they have features of both equity and debt. Like debt, they usually pay a fixed rate of return, dividends. But like equity, they represent ownership and sit ahead of equity shareholders during liquidity. Question 3. Commercial paper, CP, is an unsecured money market instrument issued in the form of a promissory note. What is its typical maturity period? The answer is A. 7 days to 1 year. Because commercial paper is a money market instrument, it is inherently short-term. Highly rated corporate giants use this to fund immediate needs like seasonal working capital, and it always matures within a single year. Question 4. Internal financing is also known as plowing back of profits. Which source of finance does this refer to? The correct answer is A. Retained earnings. Plowing back is the perfect visual analogy. Instead of distributing all profits to shareholders as dividends, the company keeps a portion and reinvests it back into the soil of the business to grow future operations. Question 5. Which of the following statements is true regarding trade credit? The answer is B. Trade credit is an informal arrangement where your supplier lets you buy now and pay later. No banks are involved and no assets are mortgaged. It's built purely on business relationships and trade cycles. Question 6. A firm wants to raise long-term funds without diluting the voting power of its existing management. Which source should it ideally choose? The correct choice is C. Debentures. Debentures are a debt instrument. Question 7. What is the primary focus of the liquidity versus profitability trade-off within the scope of working capital management? The answer is B. This is the classic tug-of-war in finance. If you hold too much cash, high liquidity, you are safe, but that cash earns nothing, low profitability. If you invest all your cash into profitable projects, you might not be able to pay your bills tomorrow. Don't forget to like this video, share it with your study partners, and subscribe for more Commerce Set exam content. Good luck with your studies.